Hey there, this is Mike Durr, Kingwood Mortgage Guy, and I'm here with the famous Joe Salas of Purple Paint Inspections and Byrd Properties International. And we're going to be talking about headlines in the news today. So anyway, Joe, you doing okay today? Talk to me, brother.
Yeah, man. If I'm famous, you're legendary. How about that?
Well, I don't mind being legendary. At my age, that's probably a good thing.
Yeah, I've been doing okay. Was in class all day today, doing some commercial real estate training so that I may better serve any clients out there looking for commercial real estate. So I'm happy to expand my knowledge. I'm a firm believer, as I've mentioned in previous shows, that knowledge is power. Everybody hears that, but I also believe that knowledge is value and knowledge is uniqueness in the game of real estate. So I'm happy to absorb the information. There was a lot of information, but I think it was good information. I still got 11 more classes to go through before I'm accredited. So it's going to be a journey, but I think it's going to be well worth it.
Well, I think everybody thought this real estate game was easy, and they don't see the stuff that you do behind the scenes. And that training is not, it's not like you're going to be entertained. That's pretty unentertaining stuff, if I can remember the stuff I know.
Well, as far as entertaining, it can be, but it's a lot of hard work. I think of it almost, we're not lawyers, but we're as close as you can be, to, in certain regards, to being a lawyer, because we're responsible for correctly and completely filling out these contracts that people enter into and execute. So,
Right.
especially with residential and now learning about commercial real estate, it matters. And being informed is something that you want your realtor to be when you're out there searching for a realtor in the market. You want them to be informed, and you want them to be able to take care of you with their knowledge and provide value to the transaction.
That's right. So we got to study. That's right. So our show today is about the headlines, and I wrote down a couple things that are going to be part of that. The first thing that's big news, at least in the world I live in, is interest rates, mortgage interest rates. We'll talk about those. We'll talk about property availability. And that's another thing that first-time home buyers or even second-time home buyers or third-time home buyers want to know about. The demand for properties. Is there any indication that it's letting up or not? And then what is going to be in the future? That's kind of like the theme of what we're going to be talking about. And is there anything you wanted to add to that?
Let's do it.
Okay.
I'm excited to hear what you have to say, and as always, I'll enter in some of my opinions and information that I have.
Well, I'm not excited to talk about interest rates because they're not much fun right now. But I will tell you that after doing business for 25 years, I have never seen a time when rates have risen as fast as they have risen over the last 3 months. I mean, to give you a quick example, in January, we were offering low 3% rates. It could have been 2.99, it could have been
And the
3.1.
twos. I had some
Yeah.
clients in the twos. Yep.
Yeah, and if they were at 15-year, they'd have been well into the twos. And so there are people out there that we pre-qualified back in January and even February that had 2 and 3 and maybe low, well, probably not even 4s in February. But now rates today are in the mid 5s. And there's an indication from, well, I look at this news sheet right here. It's the Mortgage Backed Security Live Morning News, and it shows the Fed, Mr. Evans, who's one of the muckety mucks there, sees year-end rates 2.25% to 2.5% higher than they are today. So with a little bit of math, that means you're talking about 7% interest rates, and 7% interest rates will change the dynamics of what's going on in the real estate market right now.
No, I agree. It's going to make the cost of the house in total more for clients. It's going to disqualify some too, as far as where they're looking at the price ranges.
Well, I've seen where we pre-qualified somebody for $375,000 in February or March or gosh, even the 1st of April, and all of a sudden the ability to qualify for that 375 is no longer there. As a matter of fact, they may be qualified for 325 now, or maybe $300,000 now. And so the thing that we talked about last week, and I wanted to stress it this week too, is that it is not the time to wait. If you're going to be buying a house anytime, well, I told the guy, I said, Well, first off, you're 3 months late because the house you would have bought 3 months ago would have been bigger and nicer and fatter and everything then. But if you wait 3 months, it's going to be worse again. So that's one of the things that's going on. And just to kind of give you an idea of what's going on, why rates have gone up like they have is that, and I don't want to get too technical or in the weeds or anything, but the government for the last 3 or 4 years has been supporting the purchase of mortgage-backed securities in the bond market. Mortgage-backed securities are bonds. They're sold in groups every day. They're traded just like stocks and bonds are. And when mortgage-backed security bonds are purchased, that causes rates to go down. When they're sold, that causes rates to go up. And because the government, our U.S. government, had gone in and was buying millions, maybe even billions of dollars of these mortgage-backed securities, rates went down to historic levels. I mean, and we got to sit there for 2, 3, 4 years. I don't remember exactly, but it was 3 or 4 years, which made the ability to buy homes dramatically easier and buy more of a house. And
I bet the refinancing market was hot too, right?
Oh, the refinance market was on fire. And I mean, everybody that had a mortgage needed to refi. I mean, that was the bottom line. If you had a mortgage, it was worth refining, and it was like, it was crazy. I mean, and that's when it took 2 months, 3 months to close, because everybody was trying to refinance at the same time. There weren't enough processors, there weren't enough underwriters.
Appraisers.
Appraisers, oh my gosh, yeah, the appraisers were a real hassle, and they remained still a big hassle up until about 3 weeks ago. But anyway, it was one of those crazy times. And the bottom line on that deal is we're past that now. And now we're in a market that historically will be, well, I don't know if it's going to be at the end of it, if it's going to be normal, but 5, 6, and 7 is a pretty good spot for buying a property. At least it was for the longest time. And I looked at a chart recently, and we may have talked about the chart last week, but I looked at the rate chart back from 1972, and the sweet spot seems to be in that 6 to 8% range, which is where, at least in the lifetime that we have, is where interest rates have been. I tell you, it is changing the way mortgage guys are doing business right now, in the fact that when you tell somebody, what are your rates today, they will freak out and say, oh my gosh, you're too high. And they'll hang up the phone, maybe slam it down, and then they'll go shop.
Yeah, and then they'll call back an hour and a half later.
Sometimes no. The other thing is it puts a squeeze on our margins too. So I'm thinking that there's already reports of a lot of the bigger mortgage companies are closing up shop. They're letting people go. You know, that footprint that they had over all of Texas is now over Austin and San Antonio and Houston and Dallas. Forget the little cities anymore. So
yeah, I think a little bit has to do though, Mike, with probably that refinancing option kind of drying up. You know, there's not as much of volume going through because of it. So, you know, I think they'll, like you said, we'll find a common ground where it settles, hopefully around the 6-7% range. I think that's reasonable.
Well, there's no doubt about it that the people that were relying on refis to hold their business up, and for that matter, the loan originators that were doing that, there's definitely going to be a change in their system or the way that they work, just because they're not out there. Now, I will tell you, this is kind of an interesting side note on that, is people that have gone out, looked to buy a house, and missed out or didn't meet they weren't willing to pay $40,000 over the asking price. They've come back and they've looked at their house and they go, you know what, with a little extra tweaks here and there, a few modifications, this house is fine. We're not going to move. And some of those people, and I've noticed it, are doing cash out refis. They get a little money from their mortgage, the equity that they've built up, and they're refining and renovating the house on their own. And so we're still doing some of those refis, but as far as a rate play where they're reducing the rates, just not happening. So, and the other thing is, in one of the articles that I read, the indication is that it's hard to predict when the rates are going to stop rising, but the guy, Mr. Evans, indicates that he believes that end is probably going to be the end of this year. And like I said, they feel like 7% is probably where they're going to kind of peak.
Yeah, and I also have a feeling that the supply and demand will kind of even out around that same time too. I don't have a crystal ball. If I did, I'd probably go buy a lottery ticket and just retire. But depending on your market area, I do believe that we're trending that way to where there's going to be more inventory, which allows the buyers to be in a more powerful position, not the most powerful, but a more powerful position with negotiations and being able to select a home out of a bigger basket of, let's call them apples out there to choose from, right?
Yeah. Well, there's an indication in one of these other articles that shows that there has been a slight increase in inventory.
Yep.
And I'm guessing that probably, there's a lot of reasons why that could be. One, it's such a good time to sell now that there are more people that are taking that option, regardless of whether they have a place to go. Or maybe there's more investors that are starting to sell their properties. I don't know. It could be that. But it's all good when there's more inventory. And this market has been out of balance for, 2 years?
Close to it. Start of 2020 is when we started getting a little bonkers with home prices and appreciation on home prices and availability in the market. So, it really, it depends. Obviously, the first rule of real estate that everybody knows of is location, location, location. So, depending on your location, I know Austin's really hot still. I know the Woodlands is really hot still. I know parts of Dallas are still really hot. San Antonio is moderate, but it's still hot. So there are locations around these metropolitan areas that are cooling off to a certain degree, and inventory is starting to build a little bit. But again, it's just a matter of supply and demand, and with as many out-of-state clients that are moving in, potential customers that are moving in from out of state, seeing Arizona, California, New York, Canada. I have a couple Canadian customers that have called me recently.
Yeah.
So, it is still a demand out there for real estate. And I think from that shift in 2020 when COVID hit, it allowed people to not necessarily have to be close to work, close to a proper location where they had to show up to work. There's been some shift to the dynamic of, virtual office or working remotely that has helped that demand and shift the demand away from, these areas where they were in like the Californias and the Arizonas and the New Yorks, and have tended towards areas where the buyers think that it is more beneficial for them to live based on taxes and property taxes, etc. So we have seen that shift, and it is still working and finding a kind of a middle ground or an equilibrium, let's call it. But I think with the dynamic of what you're talking about with the loans and the changing market, I think you're right. Around the end of the year, I think hopefully we'll find somewhere where it develops a semi-equilibrium where the demand and the supply kind of get to a place where they match, and then the mortgage rates start evening out and settling down a little bit. But it's been crazy as far as the increase you were talking about. That's nuts. Yeah.
It is tough. So I want to ask you that because that's one of the things that I think that particularly first-time home buyers want to know, because they haven't ever seen anything like this. It's like somebody pulled the rug out from under them. And so I'm thinking one of the big kind of terms that I hear is bubble. Is this going to be a bubble? And I know that there's fear about that. And I have my opinion as to why that I don't think that's going to happen. But go ahead and you go first.
Are we going to realize a 2008, 2009 bubble in real estate? I don't think so. I don't think we'll see that again. There's a different structure in place because of what happened in 2008, 2009 that will hopefully prevent it to a certain degree. But, when people are out there, I was just talking with a client the other day, talking about a house in California. It had listed for 1.2 and sold for 2.5. In my opinion, that's a bubble. But it is what it is. If there's a demand out there that will consume that and is able to make it work for them, it is what it is, and that's how the market plays. When we go out and do comps for clients, we're looking at 90 to 100 days out in sales in the past, right? And that's how we develop our market pricing or comparables in the market. And if the market is still ingesting those type of purchases, it is what it is at this time, right?
Yeah. So here's my comment. I got two main points that I think are a reason that I don't think there's going to be a bubble anytime in the near future. And one of them goes back to the thing that you said in real estate. It's location, location, location. But I'm thinking not so much specific location. I'm thinking just in general in the United States, their southern states are lower, or the cost of living
Cost
is
of
lower
living.
than it is in a lot of the other states.
I agree.
And these people, same thing, I think is a brilliant idea or a brilliant point, is that with COVID, the work at home thing is changing everything. And you don't even have to live in the same state to do the same work you did before. I mean, the gal that works for me as a processor, she's in Iowa. Now, I think she'll be in Texas before it's over. But,
hey, if she needs a realtor, let me know.
It's a good point. But I mean, that's a big deal. And I don't think that really a lot of people have thought about that. So I applaud you. That's a brilliant idea. The other thing is that the inventory that has been built, there's just a shortage, even if, because these same type of markets are all over the United States. Even if you're in Iowa or you're in Wyoming or Arizona or Denver, the same thing's happening all over. And so there's just a shortage of housing or single family homes for people. And even though we in the south part of the United States have been super busy, that the interest rates are going to dissipate some of that, but not enough to cover to make this a market where if you bought a house for $10,000 to $50,000 over the price that's listed, you're probably going to be able to survive that. And the example I gave a couple of weeks ago was the house or the condo that my daughter bought in Austin. And it was not 3 weeks after she bought it that somebody bought a property, a condo that was just like hers for $40,000 or $50,000, I forget what it was, $40,000 or $50,000 more than what she paid for it in February. And it's just because it was in the right location and it was close to where everything was fun. And the people that bought it, I don't know if they were from Texas or if it was just Austin. Now that's a dramatic example, but the same thing is happening here. If there's a shortage of houses, they've got to go somewhere.
Yeah, especially in the Woodlands area.
Yeah.
In the Woodlands area. You know what I've been getting a lot of lately, Mike? People asking me for comps for their appraised values of their homes.
Oh yeah, that's a great.
They want to challenge those, but I mean, you see the same thing happening with the appraised values. Without the homestead exemption, I would have been over 10%. So,
well, yeah, I mean, that's something that I preach almost all year round, is that it's a constant battle between the tax appraiser and the people that are in the houses. And if you don't pay attention to that can cost you a lot of money.
absolutely.
And they've got pretty good valid information this year to raise the value of your property for tax purposes. And it's not any fun. So it's going to be a battle.
Yeah, for sure.
All right. What else I got? Demand. Have you seen any slack of demand?
No, not really. The thing that's affecting, I don't necessarily want to say the demand, but if supply's not there, demand shifts, right? If interest rates raise, demands shift. So we are seeing a shift in demand from pre-owned homes to new build homes. And the new build homes, we're having problems with supply issues, as everybody's hearing. So it is kind of tampering down a little bit the demand, but the demand is still strong and still there. I look at the new homes that are released every day in the Woodlands area and send out emails, auto emails to my clients. My inspection business is booming right now as far as going out and doing inspections. So there is not a slowdown that is perceivable, but that demand is shifting a bit to homes that are either out of the area, a little bit further north or a little bit further west than me, and then also homes that are the new build inventory homes. And as an example, new builders, these production builders that are around the Houston area, they've stopped allowing people to go to their design centers. That's how bad it is.
Really?
They're doing inventory. They're not building any sort of select your flooring, select your fixtures type of homes as much as they were. There is still some of that going on, but the last thing the builders want to do is make a promise of, hey, this is going to be your floor, and you design your house around the floor, pick countertops and your fixtures, and then you find out 5 months down the road that it's not going to happen. And then what happens? You're left with a client, a homeowner or a future homeowner that's not happy. Answers that aren't sufficient, and so you're seeing a little bit of shift in that. But as far as demand proper, I don't think it's been reduced too much. There is still the supply issue with both houses that are hitting the market and supply issues with new builders that are creating these new build houses. But I still see demand strong in the area that I'm in. And I'm on the north side of Houston in Conroe, Woodland Spring, Magnolia, Montgomery area.
So two things that I heard just in the last day or so was that somebody that had gone in and they had gone under contract in a new build. The new build was supposed to be built, I guess, 3 months. I mean, there was some construction on it, but they were out about 3 months. And they were informed along the line that it was going to cost more than what the contracted price was. And I thought, now, I haven't heard that before. I mean, I thought they kind of had to stick to the contract, right? The amount on there.
It depends on the verbiage in the contract.
Well,
As a realtor, we aren't lawyers, so we do, to a certain extent, review your contract. But to give you legal advice on how to solve that or protect yourself from that, that's more of a legal issue.
Yeah.
So one of the things I tell all of my clients that are buying a new home is make sure you read the fine print, understand what those terms are, understand what the contract price is, and if there's any adjustment on the contract price based on what happens with the builder and their supply. I had closed on a house right before Christmas of last year, and the builder held to their price, although the appreciated value during the time of construction actually increased the price of that house, the appraised value of the house, over $50,000.
Yeah.
So if the builder would have created that inventory and sold it when it was complete, they would have made $50,000 more. So be aware that could be something that works in your favor as far as a consumer, or works against you. So make sure you're reading the fine print of the contract.
Well, I can see the builders, because the contracts they write are not the Trek form. I mean, they write their own contract.
They're proprietary, yeah.
And
their lawyers make it.
Trust me, they're going to cover themselves. So if you're doing that, make sure that you get somebody that understands that information before you sign that dotted line.
Absolutely, especially new buyers.
Just today, one of the borrowers that I'd pre-qualified, and she was looking for existing homes, but she got frustrated because of the craziness on trying to be the lottery winner of a particular house that comes on the market. And so she's going to be a new build, and she let me know that they don't want a pre-qualification, they want a pre-approval.
Yeah.
And
a lot of the new builders are going to make you go through they will say that you have to qualify through their in-house lender. And Mike, fill us in on whether or not you can, they have to use them. I think we've talked about this in a previous conversation, right?
Yeah, they're feisty. I mean, it's always interesting to go up against a builder, and the one thing that they have that I don't have is a bunch of cash to throw at you if you do that. I'd love to. I don't know where it'd come from, but the builders will give you all kinds of goodies if you go with their mortgage person, mainly because their fees are higher and their rates are usually higher.
Yeah.
So, yeah. I mean, and if somebody goes in and needs that money, then I tell them, I mean, it's going to be better for you since it's going to help you buy this thing to do it, but you're going to just know that you're going to be paying monthly for.
No, that's what I tell my son, right, Mike? You know what I tell my son? Nothing's ever free. He's always on the phone looking at these free apps and everything. I was like, that's not free. They're making money tracking you moving around. They're making money selling you ads. It's the same thing with these new builders. They're going to promise you closing. They're going to pay closing costs or getting you a certain amount of credits. But the best thing to do is to get in touch with Mike, get in touch with you, sir, and send some information over to you and have you compare and see how it turns out in the long run. because there are some hidden fees and some tricks that they do to make sure that they get their money in the end, right?
Oh yeah, yeah. Well, I appreciate that. Absolutely. All right. So the last thing is we're going to talk about today is the future. What is going to happen? What's your predictions? I want to go short term. Let's say 3 months. Then I want you to look at a year, and then I want you to look at 2 years.
Short term, mostly sunny, 80 degrees. Just short term, I think we're still going to have this demand that's pretty strong. I think the rising interest rates are going to tamper things a little bit and shift the demand from houses that were being sold and bought to other price ranges and other houses as far as the new builds and outside of areas that are popular. Long term, though, I do see an equilibrium forming where the supply and the demand will come to a happy medium. I do see you can fill me in a little bit more intelligently about the interest rates. Hopefully they'll start mellowing out a little bit and reach a place where it gets to something that right now there's a lot of uncertainty, right? And so that uncertainty is scaring away potential buyers, especially first-time home buyers.
Yep.
So once that uncertainty kind of mellows out a little bit, I think long-term, first-time home buyers and home buyers alike, out there in the market will agree that it is what it is, right? And if they need a home, they're going to swallow the 6%. They're going to swallow the 7%. It's just a matter of need versus how they're educated and how they understand the movements of the market and what works in their favor and what works against.
So I think that they have to get their mind around what happens. The interest rate can it affect the equity that you build up? I don't know. I don't know if that does. It definitely raises the cost of the entry into the real estate world or owning real estate. But as far as we can see, properties have always appreciated, particularly if you pay attention to school districts, the area that you're in, the shopping that's around there. I mean, it's all about the location. It's about the amenities. It's about the access and those things. I mean, it used to be considered a good year when your real estate appreciated 1%, 2%, 3%. And 3% was fantastic.
Oh, you mean no more 13% appreciation over 1 year?
I know.
Is that what you're saying, Mike?
Yeah. I don't think that that's going to be in our long-term future. I do think that over the course of even maybe the next year, I think we're going to see a strong appreciation. I think it's not going to be a double digit, but I think there's going to be strong appreciation. And I know we agree on this because we talked about it last week, is the time to buy would have been 3 to 6 months ago. Okay. That was the best time to buy. The next best time is today. And the time in 3 months, that'll be the right time too, but you'll pay higher than you are today.
Yeah.
So if there's a message to get out there is don't wait around, don't be hesitant. If you're gonna, and real estate, the one of the few things that you can feel certain about it, if you pay attention to some of those details I just talked about, it's one of those things where it's a life-changing economic structure that's going to be positive for you financially. You get in a house, you fix it up, you do some things to it, you let time take it with you, you make sure your neighbors aren't keeping the property trash, and good things are going to happen. Yeah. And it just happens consistently.
I agree with that with a caveat. Knowledgeable decisions are the good things that are going to happen to you.
And have experts around you.
Exactly, like myself and you, right?
Well, that's two good choices. I think
that's two good choices. I'm telling you, but that will, there are risks to everything, right? And so I don't want to fill any potential home buyers or first-time home buyers with the thoughts that, hey, if I buy something, it's going to make me money in the future. There are risks. There are maintenance things that you have to worry about, and I see it all the time in my inspection business. A lot of times homeowners don't know what they don't know. Yep. And so
owning a home is not just buying a home and selling it later. There are all sorts of costs that come along with that and things that you need to be aware of. A good realtor will help you out. A good mortgage guy will help you out, and a good inspector will help you out to be as knowledgeable as you can be at the time of purchase. And I think that that's going to make or break the opportunity that you would have differed from anybody else out there that doesn't have that knowledge or that help through the process.
Well, and one thing I'll add to that is that we are not one-time Sallies, okay? Once we help you, we're kind of your advisor, or you are able to tap into our advice over the course of years to come. And that's what we want, as a matter of fact. And let me tell you, I know people say, well, Mr. Durr, I didn't want to bother you. Well, listen, you've got a question. I don't want you to hesitate to call me. And I know Joe's the same way.
No, I was eating dinner with a client last night. We closed on their home today, so we went out to dinner last night to celebrate. And that's what I told him. I looked at him and I go, I have a habit of adopting my clients. So now you're my uncle. Call me if you need me. Call me if you need me.
Well, Joe, tell them if they had wanted to get in touch with you about either real estate or your inspection business, how do they get a hold of you?
Yeah. Best way is to call or text me, 346-224-4224. My real estate website is www.selljoehouse.com, and my inspection website is www.purplepaintinspections.com. Feel free, though, to reach out to me if you have any questions via phone. That's the best way to get a hold of me.
Well, Joe, I'm so glad you're on the stream today. And same thing for me. If you want to find me, just look up Kingwood Mortgage Guy. It should be pretty easy to find me. Mike Durr, the Kingwood Mortgage Guy. Guys, until next week, same station, we'll talk to you next week. All right?
See you next week.